If you could learn just one reversal pattern as a beginner trader, the double bottom is one of the easiest and most powerful setups to understand. The double bottom is a trend reversal pattern. It usually appears after price has been moving down. The market tries to push lower twice, but fails both times. And that tells us something important. Sellers are losing control, buyers are slowly stepping in. Visually, the pattern looks like the letter W. That's why it is easier to recognize than other patterns. You will see the first bottom, a bounce upward, the second bottom, and then a breakout higher. This moment represents a shift from selling pressure to buying pressure. Understanding why the pattern works is more important than memorizing shapes. Although the M or W shape is pretty relevant for this particular pattern. At the first bottom, sellers are confident. Price bounces, but many traders believe the downtrend will continue. When the price returns to the same level again, sellers try one more time. But this time, price cannot continue lower. So this is a failure. And failure creates trapped sellers. When price starts moving up, those sellers must buy back their positions. In the pattern that you see here, the two double bottoms are not always textbook same level. Sometimes one is lower, the other one is higher. However, from what I have seen, the second bottom should be at the same level as the first bottom or a little bit higher up. If the second bottom is lower than the first bottom, the pattern is void. But there are more elements that make up the double bottom pattern. Once we identify the two bottoms, then we can draw the neckline. And the neckline is the line that joins this middle bit here. So we could draw it like this, and this becomes the support/resistance zone. Here's the key idea. The double bottom is not confirmed until price breaks the neckline. Many beginners see this double bottom structure and they enter too early. They anticipate. But trading rewards patience. So you need to learn how to wait for confirmation. Let the market prove buyers are in control. Once the price breaks above the neckline, momentum changes. Buyers gain confidence and sellers begin exiting. Market sentiment shifts. The breakout confirms the pattern. But here is a very important beginner tip. Do not chase the breakout candle. Big candles create emotional decisions. Professional traders often wait for the next step. This giant candle here, this is the breakout candle. And you do not want to enter anywhere in this zone because it cuts into your risk-reward ratio. So what I mean by waiting for it to retest, I mean for the price to go back down to the neckline. This is significant because the old resistance has now become a support. And this support area is usually the safest entry point. Because now risk becomes clear. You are not guessing anymore. You are reacting to confirmation. And this single adjustment can dramatically improve trade quality. Now let's talk about stop loss. And I want to use the market structure here. So option number one is the conservative option. So let's say we're entering the trade on the neckline. And the conservative option is to set the stop loss below the second bottom. So you enter at the neckline, set the stop loss below the second bottom. So you would do this if, let's say, if you see the price here and you want to re-enter it on the neckline, then you would set the structure to be like this. However, let's say you are late and the price is around about here. This would mean that you could enter it here, but you don't want to place the stop loss here because it is way too big and it will eat into your profit. So what you would do then is set it below the retest area when it bounced off the neckline. So this would still be feasible. Now let's measure the target. So what you want to do is measure the distance from the neckline down to the lowest bottom. So from here to here, this is the distance, and we extend this distance above the neckline. So this would be the take profit area. And this is the minimum take profit target. So this is not a prediction, this is a probability expectations, and sometimes price stops earlier, sometimes price goes much further. Your job is not to predict, your job is to manage risk. So in this case, we had, if we placed it here, we have a risk reward ratio of 1.17, but we could set this up and have a general rule to try the risk reward ratio of 2. I'd like to go over some common mistakes beginners make. So first one is entering the trade before the neckline breaks. I know you are very eager to enter a position, but this is a bad strategy because patterns are not set until they are confirmed. Secondly, forcing perfect symmetry. As you can see in this structure here, we do have a clear double bottom with the W shape, and that part is good, but the bottoms are not exactly ideal. Many times this will happen. So if you're waiting for perfect symmetry, you will be waiting a long time. Next one is if you are chasing large emotional candles. This is a really serious psychology issue. So for example, this candle here starts moving up, and once it gets to this point, you start to think to yourself that you've lost another chance, you've missed out on the trade, you better enter now so that you don't miss out completely. That's actually a common psychology pattern, and that is something that you will have to work through to catch yourself when it's happening and resist. There are plenty of opportunities if you get triggered by this pattern that, oh, you've missed a trade. That's actually scarcity thinking. That's actually a mindset where this is the last chance. This is one and only pattern you're seeing. You have to take it no matter what. But the market repeats itself, and there will be plenty of other patterns that are very similar to this one. That's why this is so popular. So I would say that the pattern here is a framework, and what you have to focus on is patience, discipline, and risk control. And you have those three elements, you can create consistency. To summarize, I will provide you with a final checklist, something you can ask yourself when you see a double bottom. Firstly, was there a clear downtrend prior to the pattern? In this case, I'd say yes. Secondly, do I see two support rejections, here and here? Yes. Has the neckline been broken? Absolutely. Did the price retest support? Yes, we have this pin bar candle here and it retested it in a healthy way. Is my risk clearly defined? Well, this section you should plan it out ahead and then determine the risk reward ratio that you are confident with. So if you answer yes to those 5 questions, then you have a valid setup. I would advise you focus on mastering one pattern at a time. Trading becomes easier when your process becomes simple, and simple, executed consistently, becomes powerful. Thank you for watching.